We want to keep a focus on the federal budget from June. This budget by many was considered status quo, but really took a hit at some key tax planning that's done, especially by small business owners. I want to talk about the employee profit sharing programs. These are programs that stem from legislation in Section 144.10 of the Income Tax Act. And this legislation was sleepy for so many years. Nobody even really knows when it entered the Income Tax Act, but what we do know is EPSP Programs, their legislation predates the Canada Pension Plan legislation from 1966 and other retirement programs in Canada. So one result of an EPSP program, because its legislation predates CPP legislation, is that when an employer puts money into an EPSP program for its employees, it effectively works around Canada Pension Plan. When a taxpayer earns their T4 income from an EPSP program, they get a T4 slip. It's called a T4PS, but there's no participation in the Canada Pension Plan. So this unintended result was actually discovered around about 2001 by taxpayers in southern Alberta. And then by about 2003 in Western Canada, many small business owners had set up EPSP programs, and then they just flowed their compensation through an EPSP trust account. And when they did this, they got a T4PS slip instead of a T4 slip. The T4PS slip still created RSP room, but it didn't attract the CPP costs, which employer-employee portions have now exceeded $4,000 per person. So this became quite a popular planning strategy. What's the problem? Well, CRA, for some reason, got their feathers in a fluff over this. And when they see a taxpayer working around Canada Pension Plan, they felt that that was something that we need to punish the taxpayer for, even though that taxpayer could do it through a T5 if they own their own business. So the taxpayer who's doing this has now become a target by CRA. And the issue with the taxpayer is that when they draw a T4PS slip, they get the RSP room, which gives them money to save for retirement, which reduces their need for social benefits during retirement. So we're not entirely sure what CRA's issue is with EPSP programs in this manner, but nonetheless, the 2011 federal budget has now stated for the record they're going to be changing EPSP legislation in the near future to close this opportunity to work around CPP. And there's a high likelihood that they're going to do this retroactively. So if one is doing this in the small business environment or contemplating it, they need to start thinking about alternatives, going back to a T4 program or shifting over to dividends, which is a T5 program. So it's a sad day for small business owners, but if anybody is looking at this legislation and finds it intriguing, they definitely want to look at other products and seminars offered by ILS Learning, because we talk about employee applications of EPSP programs. And while the owner-manager application might be shutting down, there's lots of interesting things these programs offer to non-owner managers.